In this video, we discuss the 10 best undervalued Dividend Kings stocks to buy now. So, before we start, please like this video and subscribe to our channel for weekly updates. Dividend Kings are companies that have consistently raised their dividends for more than 50 years. Investors like these companies during rough times in the economy because their cash flows are stable. Investors like companies like the Coca-Cola Company, ExxonMobil Corporation, and Johnson & Johnson because they have some of the best dividend growth records in the business. With the way the economy is right now, investors should choose stocks that are likely to grow in the long run. In this case, it's best to buy value stocks that pay consistent dividends, as they can be a hedge against inflation. A value stock has a lower price than it should have based on its fundamentals, such as its earnings and dividends. The chief investment officer at BRI Wealth Management, Dan Boardman-Weston, told Bloomberg earlier this year that strong monetary policies will create an opportunity for value stocks this year. Analysts are also optimistic about dividend stocks because they have paid out more than ever in the first 2 quarters of this year. Janus Henderson recently raised its predictions for annual dividends. It now thinks that dividend payments will reach $1.56 trillion by the end of the year, up from $1.54 trillion. This shows the headline growth of 5.8% year over year and the underlying growth of 8.5%. Now let's review our 10 best undervalued Dividend Kings to buy now. Number 10. Farmers and Merchants Bancorp Incorporated, ticker, FMAO. Farmers and Merchants Bancorp Incorporated is an Ohio-based bank holding company that provides business and individual banking services. In addition to this, the company also provides services in commercial lending, online and mobile banking, and personal checking. In Q2 2022, Farmers and Merchants Bancorp Incorporated reported strong results, posting a GAAP EPS of 63 cents, which beat estimates by 1 cent. Its revenue for the quarter came in at $25.1 million, which showed a 25.7% year-over-year growth. Its operating cash flow stood at $14.5 million, up from $7.8 million in the previous quarter. The company's free cash flow also jumped to $14 million from $7.4 million in the preceding quarter. In June of 2022, Farmers and Merchants Bancorp Incorporated declared a quarterly dividend of 19 cents per share and a special dividend of $0.0125 per share. The company has been raising its dividends consistently for the past 56 years. As of September 6, the stock's dividend yield stood at 2.79%. As of the close of Q2 2022, 10 hedge funds tracked by Insider Monkey own stakes in Farmers and Merchants Bancorp Incorporated compared with 11 in the previous quarter. The collective value of these stakes is over $13.6 million. Number 9. National Fuel Gas Company, ticker, NFG. National Fuel Gas Company is an American natural gas distribution company that also specializes in exploration and production. In July, Scotiabank assumed its coverage on the stock with an outperform rating and an $89 price target, highlighting the company's capital allocation and financial flexibility. In June of 2022, National Fuel Gas Company raised its quarterly dividend by 4% to $0.475 per share. This marked the company's 52nd consecutive year of dividend growth. In addition to this, the undervalued Dividend King has been making dividend payments for the past 120 years. As of September 6, the stock's dividend yield stood at 2.71%. Though National Fuel Gas Company missed street estimates on various accounts in Q2 2022, the company's revenue of $502.6 million saw a 27.4% year-over-year growth. The company's cash position also remained strong during the quarter, with its operating cash flow standing at $228.3 million. It generated $51.3 million in free cash flow and paid $43.4 million in dividends, which shows that its dividends are safe with its cash flow. At the end of Q2 2022, 23 hedge funds in Insider Monkey's database reported owning stakes in National Fuel Gas Company, up from 21 in the previous quarter. The collective value of these stakes is over $180.6 million. Number 8. Stanley Black & Decker Incorporated, ticker, SWK. Stanley Black & Decker Incorporated manufactures industrial tools and household hardware. The company is also a leading provider of security products in the U.S. In the first 6 months of 2022, the company had $282.3 million in cash and cash equivalents, compared with $142.1 million at the end of December 2021. In Q2 2022, the company's revenue came in at $4.4 billion, which showed a 16% year-over-year growth. Its operating margin of sales for the quarter was 8.1%. On July 20, Stanley Black & Decker Incorporated hiked its quarterly dividend by 1.3% to 80 cents per share. The company has been making consistent dividend payments for the past 146 years while maintaining a 54-year streak of dividend growth. The company has an industry's leading annual dividend payments record. As of September 6, the stock's dividend yield was recorded at 3.75%. In August of 2022, Morgan Stanley maintained its overweight rating on Stanley Black & Decker with a $110 price target, appreciating the company's latest programs which would drive its EPS growth in the second half of fiscal year 22. Number 7. Lowe's Companies Incorporated, ticker, LOW. Lowe's Companies Incorporated is a North Carolina-based retail company that specializes in products related to home improvement. The company was a part of 53 hedge fund public portfolios in Q2 2022. Compared with 65 in the previous quarter. The stakes owned by hedge funds hold a combined value of roughly $5 billion. With over 10.2 million shares, Pershing Square was the company's leading stakeholder in Q2. In Q2 2022, Lowe's Companies Incorporated reported a 0.2% growth in its comparable sales for the U.S. home improvement business. The company's cash position came in strong as its operating cash flow grew to over $3 billion, from $2.9 billion in the previous quarter. It generated roughly $2.7 billion in free cash flow, up from $2.6 billion in the preceding quarter. The company's dividend payments amounted to $524 million during the quarter, which takes its payout ratio to 27.08%. On August 26, Lowe's Companies Incorporated declared a quarterly dividend of $1.05 per share, consistent with its previous dividend. The company has been paying uninterrupted dividends since its IPO in 1961 and holds a 59-year track record of consistent dividend payments. The stock's dividend yield came in at 2.18% in September of 2022. In August, Truist raised its price target on Lowe's Companies Incorporated to $263 and maintained a buy rating on the shares. The firm mentioned that the company's trends remain solid with its strong DIY sales. Number 6. Steppen Company, ticker, SCL. Steppen Company is an American chemical manufacturing company that provides innovative chemical solutions to its consumers. The Undervalued Dividend King has been raising its dividends consistently for the past 54 years. It currently pays a quarterly dividend of $0.335 per share and has a yield of 1.36%, as recorded on September 6. The company has a healthy payout ratio of 20.09%. In Q2 2022, Steppen Company reported revenue of $751.6 million, which showed a 26.2% year-over-year growth. Its operating cash flow for the quarter came in at over $59 million, up from $20.9 million in the previous quarter. It also generated over $10 million in free cash flow during the quarter and paid $7.5 million in dividends to shareholders. In July 2022, Stifel reiterated its buy rating on Steppen Company with a $133 price target, highlighting the company's strong Q2 results. However, the firm presented a conservative view of its margin expansions due to supply chain issues. Steppen Company can be a good investment option for income investors among other dividend companies like the Coca-Cola Company, ExxonMobil Corporation, and Johnson & Johnson. Number 5. Emerson Electric Company, ticker, EMR. Emerson Electric Company is a Missouri-based manufacturing company that also provides engineering services for industrial, commercial, and consumer markets. Appreciating the company's strong earnings in the recent quarter, Argus lifted its price target on the stock in August to $98 and maintained a buy rating on the shares. The firm also highlighted the company's strong balance sheet and one of the market's longest dividend growth streaks. Emerson Electric Company has been raising its dividends consistently for the past 64 years. It pays a quarterly dividend of $0.515 per share and has a yield of 2.53%, as recorded on September 2022. In Q2 2022, Emerson Electric Company reported an operating cash flow of $740 million, up from $442 million in the previous quarter. The company generated $630 million in free cash flow during the quarter, compared with $333 million in the preceding quarter. Its revenue for the quarter also grew by 7% year-over-year to $5 billion. Number 4. 3M Company, ticker, MMM. An American multinational consumer goods company, 3M Company holds one of the longest dividend growth streaks in the market. The company has been raising its payouts consistently for the past 64 years. Moreover, It has paid uninterrupted dividends to shareholders for over 100 years. The company currently pays a quarterly dividend of $1.49 per share and has an attractive yield of 5.11%, as recorded on September 2022. In Q2 2022, 3M Company reported an operating cash flow of $1.1 billion and its free cash flow came in at $1 billion. The company's dividends for the quarter amounted to $800 million, signaling strong FCF generation. The company generated $8.7 billion in revenues in Q2 and also reported a 1% year-over-year growth in its organic sales. In August of 2022, Bernstein resumed its coverage of 3M Company with a market perform rating and a $155 price target, highlighting the company's mid-single digits annual earnings. At the end of Q2 2022, 54 hedge funds tracked by Insider Monkey had over $1.38 billion worth of investments in 3M Company. In the previous quarter, 51 hedge funds owned stakes in the Minnesota-based company, valued at over $1.53 billion. Number 3. Dover Corporation, ticker, DOV. Dover Corporation is an American manufacturing company that delivers innovative equipment and components and consumable supplies. In Q2 2022, the company reported revenue of $2.16 billion, which showed a 6.4% year-over-year growth. The company's operating cash flow for the quarter came in at $178.7 million, compared with $23.6 million in the previous quarter. Its free cash flow also jumped to $128.5 million, from $26.7 million in the preceding quarter. In August of 2022, Dover Corporation declared a 1% hike in its quarterly dividend to $0.505 per share. This was the company's 67th consecutive year of dividend growth. As of September 6, the stock's dividend yield came in at 1.57%. In July of 2022, Mizuho reiterated its buy rating on Dover Corporation with a $155 price target, as customers' ordering behaviors are normalizing after the pandemic. Number 2. Commerce Bancshares Incorporated, ticker, CBSH. Another undervalued dividend king to buy on this list is Commerce Bancshares Incorporated is a Missouri-based bank holding company. The company provides services in mortgages, loans, and credit cards. In July of 2022, Jefferies maintained its hold rating on the stock with a $71 price target, highlighting the company's strong loan growth and net interest income. In Q2 2022, Commerce Bancshares Incorporated reported an operating cash flow of over $161.6 million, up from $124.5 million in the previous quarter. The company generated $148.2 million in free cash flow, compared with $109 million in the preceding quarter. During the quarter, it paid roughly $32 million in dividends, which shows its strong FCF generation. Commerce Bancshares Incorporated currently pays a quarterly dividend of $0.265 per share, with a dividend yield of 1.57%, as of September 6. The company is a dividend king with 53 years of consecutive dividend growth. Number 1. Northwest Natural Holding Company, ticker, NWN. Northwest Natural Holding Company is an Oregon-based natural gas distribution company. In Q2 2022, 10 hedge funds tracked by Insider Monkey owned stakes in the company, falling from 22 in the previous quarter. The consolidated value of these stakes is over $38.2 million. In August of 2022, Northwest Natural Holding Company reported its Q2 2022 results, posting revenue of $194.9 million, up 31% from the same period last year. In the first 6 months of the year, its operating cash flows came in at $196.6 million, compared with $194 million in the prior year quarter. It ended the quarter with $17.2 million available in cash and cash equivalents, with total assets amounting to $358 million. One of the best undervalued dividend kings, Northwest Natural Holding Company has been raising its payouts consistently for the past 66 years. It pays a quarterly dividend of $0.4825 per share and has a dividend yield of 4.00%, as of September 2022. Which of these undervalued dividend kings would you like to add to your investment portfolio? Let us know in the comments below. And don't forget to like this video and subscribe to our channel for weekly updates on the best stocks to buy and the latest investment strategies for building wealth. Thank you for watching and happy investing.